If you invested $15,000 to $20,000 in 2018 in Tesla, it will probably be worth half a million to 400K today. If you done the same thing in Ferrari, it will probably be the same. Guys, a lot of you are probably familiar with Tesla and you're looking at the stock. It's almost near $300. And a lot of you probably saying I missed the boat. And a lot of you are in love with the car company and the car itself and the stock because it's quote unquote one of a kind. Because in this electric vehicle space, Tesla managed to succeed and was there first. So they grabbed 60% of the US market share. And a lot of people are betting that this stock can go even higher. But what happens when the new car companies or the existing car companies such as BMW, Mercedes, Daimler, Stellantis, General Motors, Ford, they start emerging and start producing just like Tesla. And by the way, these companies are all profitable, majority of them. They're all profitable. They have the same earning per share as Tesla, if not more. And I'm going to go through the analysis today here. And they also have more revenue and more infrastructure than Tesla. Now, a lot of you are just betting on Tesla because of the CEO, Elon Musk. Let's be real here, guys. That's why a lot of people are betting against Tesla with short positions. But it still remains a retail's favor. The people who are betting against Tesla are big Bill Gates and whatnot, and big CEOs and hedge fund managers. But what is the next car company? Well, I'm going to give you the analysis here. But I know a lot of you are in love with the car company, but you have to understand this love can be costly. At one stage, will be costly. Sure, they have 60% market share in the US, but what happens when the three dominant car companies in the US, such as General Motors, Ford, Stellantis, finally start producing large-scale electric vehicles, which is, by the way, in the workings, in the books, and they start grabbing that market share from Tesla. Just last quarter, Tesla lost 10% of its market share. So let's go through this analysis, and let me tell you what we're looking at here. So here is Tesla. Tesla is at $275, right? No dividend yield, no dividends, they don't pay nothing. Okay, if we look at the analysis here for Tesla, let's look at the earning per share. Earning per share is $3.50. Okay, let's look at another car company. Let's look at Peugeot, for example. Who manufactures this? Well, Stellantis. Stellantis is actually at $2 or $19.25. They pay 8% dividends. You can't see it here, but if you go to Yahoo Finance, you'll see 8% dividend yield. I personally have shares in this. If we look at the Max, they just went public 2014. They're already up 160%. Now, that's based on the fact there was just the existing car sales. This is without electric vehicles. But Stellantis, guys, Stellantis is launching Peugeot Electric, Jeep, and Dodge, and Maserati. So there's a lot of brands under this company. But if a lot of you are in love with Tesla because of the actual interior, well, just have a look at what's going on with these companies. Okay, maybe not, that's not the best. I mean, this is the new Peugeot Electric, right? This is just one brand. So yeah, we're talking, now this is still petrol, but we're talking the SUV that it has, that is actually very nice, guys, in terms of people's preference. And if we look at Jeep and if we look at Ram as well, which is all of these brands are under Stellantis, and they only control 10% of the US market share. So there is room to grab market share from Tesla. General Motors will follow, and so will Ford. And they'll all start grabbing this market share from Tesla. That's a given. If you look at BlackBerry, if you look at Nokia, they were first in the industry, and they basically got destroyed. So, you have to understand you cannot be first for long. You can be first just for a period of time, and as the competitors start coming out, and these competitors are already profitable. Okay, so if we look at STLA here, let's search STLA. This company has double the earning per share as Tesla, guys. Okay, so Tesla was $3.50, earning per share is $6.75. So they're more profitable and 7.87% dividend yield. So they're more profitable and the float is the same. It's actually lower than Tesla's. Okay? So Tesla has more float and is valued at 270. Can you imagine what happens when suddenly next quarter Stellantis comes out and says, yeah, well, we just grabbed 5% extra market share in the US. They already have 30% market share in Europe. So, once these car companies start coming out and manufacture, now the question is, can they do it profitably? Well, if we go to financials or statistics, let's go financials here for Stellantis, and let's have a look. Let's have a look at free cash flow, which is something you should look at always. I'm not sure if I can find it here. Let's see. But in terms of growth, annual growth, this is constantly growing, guys. Okay, the revenue and the earnings is growing. But let's go to statistics. Now we need to see the free cash flow. There it is, 23 billion and 6 billion levered. Operating cash flow is important. 23 billion operating cash flow. On top of that, new factories. This is only a couple of months old, from September. First battery technology center in Italy to be opened. Boom. Samsung, Stellantis partner up to open up a new battery gigafactory, energy gigafactory. Okay, so they're producing and they're moving fast. Another one, set to plan to build a second US battery plant. Okay, so these guys are moving fast. I don't see other car companies doing what Stellantis is doing. So that's why I think this company can actually come second in the race of electric vehicles, because that's what we're looking at, is who can pull it off first and who can do it profitably. Now, Stellantis already has the infrastructure to pull it off profitably. Tesla is already there. It's already generating. So when you're actually betting on a car company, you're betting that, it will generate or produce cars fast and affordably. Okay. And that's why Tesla succeeded, is because they managed to do so. But Stellantis is now at $20. What could happen in a year's time? Could they be sitting at $100? And if they pay dividends, well, that's okay. I'll just buy and hold and get paid dividends. Now, I'm only giving you this because I'm invested in this company, and that is my analysis for this company. So it's up to you what you want to do. Do not hold me accountable on this. But market share, guys, you got to understand that. Market share, these companies will start to grab it from Tesla, and they already have existing customer base. So it shouldn't be difficult for these companies to actually sell cars, because the brands that they have are already well known. So with that being said, guys, I'll see you next time. Hopefully you enjoyed this. But that's my analysis here, and it's up to you what you want to do with this information. Peace and love. Bye.